Hey everyone, welcome back to today's video. Today, we're going to check out this very interesting video, and hopefully, you'll learn something new along the way. Let's dive right in. Don't forget to leave a like, subscribe, and share your thoughts in the comments. And now, without further ado, let's get into it.
How's it going, everyone? This video is going to be over refining entries within my fractal model. Specifically, we are going to talk about using a 1-minute inversion within the hourly and 5-minute model. To do this, we are going to use my indicator. If you want to check that out, there will be a link in the description below to get access to that. Now, if you've seen my intro to my fractal model on this channel, you know that my whole goal is to anticipate one candle's open, high, low close or open, low, high close. This is going to give me bias, and then I can use the lower time frame to get entry into that. So here you can see with the sweep of this first candle and the closure back in, then I can anticipate this candle to continue lower or to expand lower. The next step is aligning my time frames together, and I'll use my time frame alignment video for that. So pairing the hourly with the 5-minute time frame, I will wait until those time frames are aligned in the same direction. So with this closure through this series of up close candles, now, not only is my hourly bearish, but my 5-minute is bearish as well. So with this, I will go ahead and mark out the T-spot. The T-spot is the area in which I expect this higher time frame wick to form, and so I will look for lower time frame entries in there. So looking for a PD array or a point of interest within this T-spot, here we have a fair value gap. I'll go ahead and once we reach into that area, I'll drop down to the 1-minute time frame. So now I'm anticipating expansion on the hourly. I have the 5-minute aligned. We are open, trading higher, and I'm expecting an open, high, low close. From here, I will look in that T-spot for a 1-minute inversion, which allows me to get on side with my risk on this high to then trade this expansion lower. And so you can see when we finish off the open, high, low close, or this bearish expansion candle, or open, high, look for my inversion, or let the wick of this higher time frame candle for, and then trade this expansion lower. Let's hop into TradingView for some examples. So here we are with our first example, and you can see we have a sweep and a closure back in. We have expansion away, and we are trading into this high, right? So we have a bullish bias from this structure, but we have taken out this high as well as previous day high and forming a reversal. So with a conflicted bias, we can go ahead and use the daily profile to see what is going on. So down here on the hourly time frame, you can see we are forming a reversal off of this previous day high and this swing point, and respecting up close candles in a downtrend here. Now, what do you notice about these? We are just creating failure swings, right? Which generally are a great target to trade back to. Now, if you understand what I've been talking about with wick size, when we have a large range already, we're not really expecting price to form a large wick like this and continue expanding higher. So more so looking for liquidity around the daily open for a target. So with that, do we have an hourly closure? We do, as we sweep the previous candle, close back in. So then I can drop down to the 5-minute and look for a fractal model. So down here on the 5-minute, you can see we have that closure. Now, do we have the alignment of our 5-minute time frame? We do not yet, as we have not closed through this series of down close candles that swept out the low. So we have to wait through a close through that level. So letting another candle form, there we get the closure through that level. Now, what do you notice about the higher time frame here? If our T-spot is where we are anticipating a higher time frame wick to form and we lack a higher time frame wick, we can then anticipate price to retrace down to put in a higher time frame wick and then trade away if our bias is correct. So let's go ahead and drop down to the 1-minute time frame and see what happens in this T-spot area. Now, a quick update on our settings here is I have them locked to the hourly and 5-minute, so I can drop down to the lower time frames and they remain the same. So here we go ahead and drop down into that T-spot. We create a lower wick on this hourly candle. Now, do we have an inversion out of this T-spot? Well, we would need a close over this level. So no close yet. Gotta wait for this close. Give it another candle. And here we have a close through that level. So I can go ahead and look to get on side with that close. I prefer to put my stop at the swing low, right, instead of waiting for another close above. And then I can look for 2R, or I can go ahead and hold this to higher time frame targets. But let's see how this works out. And there we go, we hit 2R and go ahead and trade through these failure swings to the left. So just to review here on the hourly time frame, we sweep and we close back inside. That is paired with our 5-minute change in the state of delivery. And then that marks out our T-spot, which is where we're anticipating this higher time frame wick to form. Within that T-spot, I can use the 1-minute time frame to look for an inversion level. And then once closed over, I'm anticipating this wick to hold, which gives me an invalidation throughout the duration of this higher time frame candle. So if this is going to be an expansion candle, what do we know about expansion candles? They usually close in the high or the low. So technically, if I want a time-based exit on this, I could also hold this trade until 11 o'clock. So let's see what that looks like if we take a time-based exit on runners, let's say. As we get up here, and here would be our time-based exit of closing at 11. Let's get into another example here. So here we are with our next example, and you can see we're in a consolidation range here, where we have this high as well as this low. And you can see we have taken out the low in the consolidation range. And what is this paired with on the hourly time frame? We have that sweep and closure back inside. So this allows me to anticipate a move higher here at 10 a.m., which is also a new 4-hour candle. So now dropping down to the 5-minute time frame here on NQ, we have to wait for that closure and the lower time frame structure. So here we get this closure, and what do we notice? On our lower time frame, the 5-minute is already aligned. So our indicator puts out this T-spot, or where I anticipate this higher time frame wick to form. So I can then drop down to the 1-minute time frame, and I'll go ahead and look for an inversion in this area. Now if you notice, do we have any inversion in this area? No. And we also have not swept out any lows or hit a relevant point of interest. So going to let this continue to play out. Here, what do we notice? We sweep out this low to the left, and we also have this inversion right here. So let's see what happens. Do we get a close over? Not yet. And there we get the close over. Now I can also look to take an entry on the retest, my stop on the low, and then I'd want to look for 2R. Depending on the risk to reward, I can choose to look for an entry on the close or on the retest. Now in this case, I prefer the retest just because I want to generally take profits after these short-term highs. So this is pretty close to that high. So let's see what happens. Here we get tagged in. We just miss our TP. And there we finally go and hit our take profit. So you can see it took a minute to get there, but just to review, we have that hourly closure back in. It has the T-spot on that 5-minute time frame after the confirmation has occurred. And from there, I'm looking for a 1-minute inversion in that area to get on side. Now, why is this important? Well, this low here is what I'm anticipating to be the wick low. So that allows me to trade the expansion candle within what time? Well, from 10 to 11. Once again, if we want to visit that time-based exit of trading towards the 11 close, that would be the closure and the entry. So let's get into our next setup. So here we are with our next setup, and you can see we have a consolidation into the new day, right? We have this previous day low, which we swept out once, and another time, or a 3 drives. And all you can notice from this is you see how we continue to fail to displace out of this range, right? If we're going to get a continuation lower from here, we're going to go and close below these lows. So viewing this as a consolidation range, what can we look for? We can look for the high and the low of the range. And what do we notice here? We sweep the low, we have equal highs. So if we are going to trade back into this previous day's range, or back up into this area here, where would that come from? Well, that would occur at this 10 a.m. or the new hourly candle. So from here, I can drop down to the 5-minute chart. Now with this, I want to wait for that closure through what? This series of down close candles into our relevant point of interest, or that sweep of the lows. Have we closed through it yet? No, we haven't. So I have to wait for that closure through. Now with this closure through, I can go ahead and drop down to the 1-minute time frame. Now with this 1-minute time frame, what do we notice? We notice that our T-spot has formed the wick of the higher time frame candle. That is what we want to see. So now if we're expecting this to continue, we can expect that to continue until when? Around 11, because I'm trading this open, low, high close on the hourly time frame. So what do I notice about here? Do we have an inversion? We do right here, right? We would have missed this one waiting for that 5-minute confirmation. Now do we have another inversion? We do right here. So with this, I can go ahead and look for an entry on the retest, can put my stop below this low, and then look for 2R, or I can also look to trade back towards that 11 a.m. time. So let's see what happens. Here we take that short-term high, we don't get filled, and you can see price trades away, but once again closes in the high. So this is an example of a trade I would miss because price never came back and filled me. But I hope you can see it is an expansion candle and it also closes in the high. Let's go into another example. So now that you are understanding the model, here we have our hourly time frame, our 4-hour time frame, and our daily. With our hourly, we have that sweep and closure back in. We have our change in the state of delivery. And here we have that T-spot, right? Where I'm anticipating this higher time frame wick to form if we are going to expand lower. So I can drop into the 1-minute time frame here and see if I have an inversion in that area. So down here on the 1 minute, we don't have an inversion, right? Suppose you could consider this one in here and take an entry. However, I want to see that inversion that forms the wick. We don't have an inversion in here. So letting this trade, what do we notice? We notice price is consolidating. So if we think about the phases of price, if we have a consolidation, we want to see a run of a high before trading that lower, giving us a protected high. So let's see if we can run out a high to trade lower. Nope, we continue to consolidate and trade lower. Now, this is where you can use SMT, because at the same time, or this open, ES was taking these highs while NQ wasn't, which shows its weakness, as well as another opportunity to get on side. So paired with the SMT, do we have a bullish fair value gap? We do. Does it get a close through? It does. So then once again, I could look to take an entry on the retest or on the close, look for 2R with my stop on this high. And then as we let this continue to play out, what do we notice? We do go ahead and hit that 2R. Does it get a continuation lower? It does, right? Because what is expanding? This hourly expansion candle. When does this continue to? Well, I could take a little guess and say probably around 10 a.m. So let's see. Right there, closing near the lows of this hourly expansion candle. If I wanted a time-based exit, what would it look like? It looked like something like that. So let's get into another example. So into our next example here, we've had a continuous downtrend here, and we form a reversal off previous day low, right? We sweep our previous day low, and what do we have? We have a closure through the down close candles that did that. So if we're going to continue to trade this higher or back into this current range, where would that occur from? Well, you'd want to wait for a bullish candle closure. What do we notice here? We have all these failure swings here. That's what these are, all these failure swings. So we sweep out all the failure swings, we close back inside the previous. So I can drop down to the 5-minute time frame and look for a confirmation. Now down here on the 5-minute time frame, let's go ahead and talk about a few things. Do we have that confirmation? We do, as we've closed through the series of down close candles into that important level. And then what do we also notice? You notice how we were looking for this closure on the higher time frame here that looks like this? Do we notice another one of those? We notice one right here. Does that come out of an important level? It does, as it's retesting the change in the state of delivery and into that fair value gap. So if you watched my wick video, you know if we want to see 0.5 of this be respected to trade higher, right? This should remain. And when I have an invalidation very close to the opening price, that's when I can go ahead and look for an entry off the open. Let's drop down to a 1-minute time frame to show you what I mean here. If I'm already expecting this low to hold prior to the open of the new higher time frame candle, that's when I can look to get onside with the open. So using an inversion, I can go ahead and just enter on the open with my stop on this low, expecting this to make a very shallow wick to then trade higher. So let's see what happens. There we go, we get that move higher. Now just to review what I was talking about there, if we go back to our 5-minute, what I mean is our invalidation, or where I expect price to hold, has already formed, and we form a reversal here, shown by this wick, prior to the open of the new higher time frame candle. So if this is going to expand, I don't want to see it go much lower, right? If it goes open low below this low, then it's already just consolidating, right? I want to see it just expand away. So then going to the 1 minute, we already have that inversion going into the open, and you can see our T-spot forms right here. So we wouldn't want to see price return below this low. And that is also shown with the inversion. Now let's say I didn't want to take it right off the open. What could I do? I could go ahead and enter. Once we get another confirmation here, or this change in the state of delivery, or this order block formation. Now with this, I need my stop at least on the body down here, and then I would need to capture more range for my 2R, but let's see what happens. Get a little retracement, and then we get our 2R. This is one of those more advanced cases in understanding the open high low close of higher time frame candles, so I hope it made sense. So here we are on our last example, and a cool thing about this and my fractal model is it is fractal. Since the video has been on the hourly and 5-minute models using a 1-minute inversion, you can also use it on different time frames. So let's talk about a daily and hourly model, and then using a 15-minute inversion to get on side with that. So what do we notice in here? We have these equal highs right here, which can be a target, and then we have a sweep and a close right here. So looking for expansion on this next candle, let's drop down to the hourly time frame. So down here on the hourly time frame, what do we notice? We have just printed our T-spot, and you can see it is a bit large, right? So this is not something where I want to take a positional entry. If I take a positional entry, where do I need my stop? Below these lows, and it just doesn't make sense in terms of the risk to reward. So I'm going to just go ahead and wait until we reach back into this T-spot if it gives us the opportunity. As we continue ahead, what do we notice? We get a reach back lower here. An important thing is we are leaving these highs. I wouldn't want to trade this if it trades all the way to the highs and then back in, but it's leaving our target. So dropping to our 15-minute time frame, here we have that T-spot. Do we have an inversion? Well, you can see we have a bearish fair value gap right here. Do we invert that fair value gap? We do, right? Now, once again, I want to reiterate is this isn't just pattern trading, right? I don't want to just take this because we have an inversion forming in here. It's the context of trading towards these highs, and now we have taken out these lows, right? So that is the context. So let's see if this works out. We reach back lower. Let's say I miss this entry here. Do we have another inversion? Well, let's see. If we are correct, it has to invert that. Okay. Now let's say I miss this entry. We have a closure through. I'd want to take an entry, retest. Now why a retest? Well, I'm not going to get 2R out of this trade unless I take a retest. So let's see. We get a tag. So we hit 2R on both of these trades, and that is because we have our bias correct. So I hope you found this video helpful. Once again, this is using my indicator. If you want to check it out, there will be a link in the description below. But with that, I hope you enjoyed. Have a great rest of your day. See you later.